Oil prices jumped about 2% on Tuesday to the highest closing levels in 5 weeks as escalating attacks between the United States and Iran, along with a threatened Houthi blockade of Saudi Arabia, raised fears of wider disruption to global energy supplies. Brent crude rose and settled at $92.05 a barrel, its highest since June 10th. US West Texas Intermediate rose to $85.19 a barrel, its highest since June 11th. Reuters reported that the rally was driven less by barrels already lost and more by the growing risks that key shipping routes could remain unstable. Two tankers carrying Saudi crude to China and India reversed course in the Red Sea on Tuesday after Yemen's Iran-aligned Houthi movement threatening to impose a naval blockade on Saudi Arabia. Shipping data showed the vessels making U-turns and heading towards the Suez Canal. However, sources said Saudi Arabia's Red Sea oil terminal at Yanbu continued to operate normally. The Houthi announcement has expanded the threat to energy supplies beyond the Gulf and the Strait of Hormuz, bringing Saudi exports and Red Sea shipping into focus. The warning came as US forces struck targets in southern and western Iran. Tehran responded by targeting US sites in Bahrain, Kuwait and Jordan, while at least one tanker was hit in the Strait of Hormuz. This means markets are now watching two critical trade corridors, the Strait of Hormuz, which carries oil from the Gulf, and the Red Sea route connecting Asia with Europe through the Suez Canal. Concerns over Saudi supplies have intensified by new data showing that the country's crude exports fell for a third consecutive month in May, reaching a record low. Supply risks are also emerging in the Black Sea. The Caspian Pipe Consortium has stopped receiving oil from Kazakhstan after suspending tanker loading at its Black Sea terminal following attacks on vessels. Russia has accused Ukraine of carrying out those attacks. Brent has remained in technically overbought territory for 7 consecutive days, its largest such run since June 2025. This indicates that the prices have risen sharply and could be vulnerable to a correction, but geopolitical risks are continuing to support the market. Traders are now awaiting the latest US inventory figures. Analysts estimate that the US crude stocks fell by around 500,000 barrels in the week ending July 17th. It confirmed it would mark a second consecutive weekly decline. For now, oil prices are reflecting not only the supplies already disrupted, but the possibility that the conflict could threaten multiple shipping routes and restrict access to some of the world's most important oil exports.